Happy New Year.
Happy New Year. Hey, we're going to discuss economic growth today, and it's an amazing thing. I've been reading some articles, including one yesterday from AEI, that totally miss all of the points that I made, and with others' help, in an article we have posted at policytalk.org, which is one of the reasons that we need IOPA, is because the big think tanks like AEI and others are totally missing at least some of the boats in the economic growth fleet, if I can bother to use that kind of corny metaphor. But let's launch ourselves a little further into that discussion. What do you think? What do we need to do to make it possible to at least finance some of this incredible debt with increased economic growth?
Well, I think we look back on the 1980s and 1990s as a period of the great moderation in economic policy, and that was especially true with regard to trade policy. I think in that period, we were committed to free trade and international trade and investment, and I think we had a great deal of success in lowering trade barriers, and this was a period when international trade was growing more rapidly than national income. And that was true for many countries. And of course, this is what contributed to the high rates of economic growth in that period of the 80s and 90s. And I think free international trade and investment is the key to rapid economic growth. And of course, the problem is that over the past 2 decades, we've abandoned those policies. And this is especially true with regard to our U.S. trade with China. Back in the 1980s and 90s, we were encouraging China to pursue free trade and investment, and culminating in their joining the World Trade Organization. At the end of that, China was experiencing very rapid growth in exports and trade was growing more rapidly than their national income. And so this was sort of an export-driven economic growth in both countries. So, of course, what's happened in the last 2 decades is we've abandoned these policies of free trade, and we're now engaged in trade wars and currency wars with China. And it's not surprising that international trade has actually declined relative to national income, not just in the U.S. and China, but throughout the world. And of course, as I would argue, is we should not be surprised. Trade is the engine of growth. You've got to have free trade and investment. And the fact that we've abandoned those policies over the last 2 decades is the key to understanding why we've experienced retardation in economic growth.
You know, a friend of ours, Russell Sobel, who I'm going to be visiting with in a couple of weeks, wrote an article in 2017 that we have posted at policytalk.org that actually documents some of the things you just said, namely that international trade is the key because it's the first mover on the road from rags to riches, as well as from riches to rags. If we free up international trade, we have to make the kinds of changes that it takes for the whole economy to flourish, namely eliminating corruption, making it easy to start businesses, those sorts of things. Say a little bit more about how the international trade is important beyond its direct effects.
Yeah, and I think Sobel's argument is this is true for countries that experience retardation in economic growth. That's also linked to decreased international trade, restrictions on trade. And I think one of the interesting analogies here is many people say we're seeing a period, a lost decade, like Japan experienced in the 1990s, where their trade was falling and so forth. I argue the real lost decade in Japan was not the 1990s and the industrial policies then, but rather the 1930s. And I think that when you look back at Japan in that period, prior to the 1930s, Japan was one of the most rapidly growing countries in the world, rapid industrialization, rapid economic growth, and standards of living were improving. And of course, the 1930s, Japan experienced the opposite. And again, trade is the key. What happened in Japan in the 1930s, of course, is that the military gained greater control over their economy and began shifting more and more resources out of the private sector into the government sector, and of course for military and defense purposes. And they use this argument. They use the argument that we're cut off from access to international trade in raw materials, petroleum, and so forth. And that's absolutely nonsense, because Japan had access to all of these resources right up to the 1930s. And what I argue happened in Japan is the military and the government created artificial scarcity. There wasn't a flaw there. They had access to trade in all of these goods. And the artificial scarcity was created by the government, the military government, shifting all of these resources into defense spending, and suddenly you run into shortages. So I think that I like to pose the counterfactual hypothesis. What if Japan had not had this takeover by a military government in the 1930s? What if they had continued the policies prior to that? I would argue that Japan would have continued to experience rapid industrialization, rapid growth in trade, and improvements in the standards of living of the people. In the 1930s, the real standard of living of the Japanese people deteriorated. So the reason this is so important, I think, is the parallels with today. What I see happening in in China and the U.S. is the same thing that happened in Japan in the 1930s. And President Eisenhower warned about this in the military-industrial complex in this country. And of course, in China, the government and the military increasingly dominate industrial policy there. So I'm afraid that we're the victims if we haven't learned from history. If we could just restore policies of free trade and investment, and not allow the military-industrial complex to dominate our economic policies, especially trade, we would continue to experience the rapid economic growth, the rapid expansion of international trade that we experienced in the 1980s and 1990s. But we've abandoned those policies, and so it shouldn't be surprising that we're experiencing retardation in economic growth. And of course, we're now at greater risk for the kind of geoeconomic fragmentation of trade and so forth that can lead to military conflict, which is exactly what happened in Japan.
Yeah, you could either send goods across borders or armies, I think is a paraphrase of something that somebody once said. And either goods cross borders or armies do. And well, you mentioned the military-industrial complex. Ours is broken down beyond, in my mind at least, beyond safety, because we're running short of a lot of things that we will need if things turn south in that regard. If our trade barriers and those of others do what you just described, namely reactivate these military paranoias that produce armies crossing borders. In an email a little while ago, you mentioned something I'd never heard of, and that is you called it a summer palace dialogue. And so there must be something going on in the back channels that might address this dangerous trend of trade restrictions and the resulting corruption and the reinvigorating of the swamp that'll follow that. Tell me and our listeners about this summer palace dialogue.
Well, my colleague, Admiral Bill Owens, organized the first summer palace dialogue between China and the U.S. back in 2006. And what Bill argues is that we started this sort of fragmentation and restrictions on trade back as early as 2006. And we start to see the kinds of restrictions on trade then that have become even worse. Well, and I'm very pessimistic because I think there's little hope now for formal dialogue. That is, I see the government over the last 2 decades has, in many ways, closed channels of communication, and I think that's going to continue. So I'm talking about formal negotiations, formal dialogue between the governments of China and the United States. What Bill did was to say, well, let's organize a privately funded dialogue with China, and he invited the top economists and policymakers in China to meet with their counterparts in the U.S. And they met first in Beijing at the Summer Palace, and then they had meetings in D.C. as well. And they actually made some progress. They made some recommendations for areas of cooperation on trade and investment, joint ventures, that some of which were actually implemented. That is, carried out by the officials in both countries. And since then, of course, since 2012 was the last of these dialogues, we haven't had any since. So what Bill is doing, and I'm helping him on this, is working with the Stimson Institute to organize a second Summer Palace dialogue to begin to open up communication and to identify potential for cooperative trade agreements between China and the U.S. And it perhaps it can only focus on some specific industries and some specific types of investments and joint ventures. Nonetheless, that's the direction we should be going. Free trade and investment. That's the vehicle for modern economic growth and development. Once we abandon that, all bets are off. And I'm very pessimistic that we can rely on the government of either country to write policies. As you know, Milton Friedman, we're fans, both of us are fans of Milton Friedman. And Friedman argued many years ago that China would experience modern economic growth and it would eventually make the transition to democracy that other countries have. And of course, it didn't happen. And many people asked Friedman, why is this? You predicted that China would not only grow, it would introduce democratic institutions. What happened? Well, I think Friedman was right. Ordinarily, trade should open up these opportunities to cooperate and to introduce more democratic institutions, which, of course, what Sobel is focusing on in his research. How do you get countries to adopt institutions of freedom, democracy? And I think the explanation, and Friedman agreed with this, is that China has failed to sort of allow the free market to work. It's failed to maintain the growth of resources and investments in the private sector, and it's failed to pursue the policies of free trade and investment. And the U.S. is exacerbating that. We seem to be back like we were in the 1930s with the Smoot-Hawley tariff, the worst tariff in our history, and we seem to be moving back to that era of the 30s with risks of depression and war. And I hate to be pessimistic on this new year. You're supposed to be optimistic for the new year, but how can you be optimistic when you have such lousy policy?
Well, that's what we're about here at the Institute for Objective Policy Assessment. And yeah, what you say is true. China looks like they've reasserted central planning. And of course, that's always a disaster. That fails in theory and in fact. I would, as we close today, I'd like to direct our listeners to go to policytalk.org, and under current priorities, click on fiscal, and there they'll find our discussion about economic growth, among a lot of other things that are salient. So we'll talk again soon, Barry.